Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to Group 1. Good evening. Today is October 6th, Monday. You should all be able to hear my voice, right? Hello everyone, welcome. So let's get started. Today, since I'm not at the office, we'll be using a different method. We'll be proceeding with a photo sharing format. Wishing everyone a happy Mid-Autumn Festival. As of now, we can see that one situation is that, overall, the government is still shut down right now. However, the market doesn't seem to care about the government shutdown. Overall, since we're currently in an earnings blackout period, a new round of earnings reports will start on October 15th. For now, it seems that the main thing is that there are no major changes in economic expectations. Turning into a recession, if corporate expectations and profit forecasts aren't affected, then right now, no news is good news. Next, Trump is currently gathering to invest in the key mineral company. We'll see in the pre-market that, well, Trump, because he's considering investing in this critical materials company, its stock price has clearly risen in pre-market trading. We'll discuss together what opportunities this might bring. First, let's look at this week's schedule. Actually, this week is relatively quiet. Since a lot of government data can't be released due to the shutdown, the unemployment figures may also not be published as expected. The more important events are the FOMC September meeting minutes on the 8th, and on October 10th, the University of Michigan Consumer Sentiment Index, as well as short dash, medium dash, and long-term inflation expectations. Alright, next, let's look at the ISM Services Index for September, which was released last Friday. The forecast was 51, but the actual figure was 50, which is a drop compared to the previous value. Looking at the details, you can see that prices were actually higher than expected, at 69.4, which is also higher than the previous period. On the other hand, new orders and employment also showed changes. There wasn't anything particularly positive. Although employment was better than expected, overall it was still below 50. So, looking at the current situation, the overall picture presented by the Services Index for the US isn't very optimistic. Overall, it just looks like this. The economy is relatively slowing down, while inflation remains at a relatively high level. So, looking at the details within this index, that's the overall situation here. For the parts related to the economy, such as orders or business activity, there is a trend of slowing down. As for employment, although it exceeded expectations, it has already contracted for 4 consecutive months. In addition, business activity has fallen into contraction territory for the first time since May 2020. So right now, what we're really focusing on is whether the release of real economic data will affect expectations for economic growth and corporate profits. If it doesn't, then the current economic data won't have much impact on the stock market. Overall, looking at the current state of the US economy, it seems that the economy is continuing to slow down, but inflation remains relatively high. This is basically the framework we're working with. As long as people's expectations don't change, then this current situation doesn't really matter much. Now, what we're seeing is that the yield curve might become steeper, meaning that on the short end, there might be more downward pressure, while the long end may not experience as much. Since the short end is more likely to move down a bit, the yield curve at the moment might. That's how the trend is expected to develop going forward, so let's keep an eye on how this will affect bond prices. Next, last Friday's non-farm payroll data was not released, and the reason for that was the government shutdown. If the government suddenly reopens, the data could be released at any time. If it gets released unexpectedly on a certain day, it could have a significant impact on the stock market that day. So actually, for October, we could see a lot of volatility. One reason is that, as of today, the economic data is still incomplete, and the government shutdown is expected to continue into next week. With the shutdown ongoing, there are still a lot of gaps. Once those gaps are filled, the data will be released together with the corporate earnings reports in mid to late October, so the volatility at that time is likely to be quite significant. Next, let's take a look at the US dollar index. Right now, the dollar index is at a relatively low level. As for US Treasury yields, last week I mentioned the 10-year yield, which showed a clear sign of rebounding. In fact, yields across different maturities have started to rebound. It's the same situation with the 30-year bonds, and the 2-year bonds have also rebounded. So, as we can see, bond yields are currently experiencing a rebound. Although many people expect interest rates to continue falling, the overall decline hasn't been that significant. Overall, rates are still relatively well supported, so price changes may also be somewhat suppressed. Next, let's take a look at the stock market trends. As you can see, the main stock market indices are still in an upward trend. Although the current rally seems to be slowing down a bit, the overall structure remains relatively solid. For example, the S&P 500 is clearly above all the key moving averages. As for the Dow Jones, although last Friday there was a rather obvious upper shadow on the candlestick, and it's also a bit of a distance from the 20-day moving average. Next, looking at the Nasdaq, although it dipped slightly last Friday, the overall situation is still relatively healthy. Similarly, the Philadelphia Semiconductor Index (SOX) is in the same situation, and it's even further above the 20-day moving average. Alright, now let's look at global developments. The most important event over the weekend was that Japan elected a new Liberal Democratic Party, LDP, leader, which is Sanai Takaichi. Currently, there will be another prime ministerial election on October 15th. In the past, generally speaking, whoever is elected as the LDP leader is very likely to become Japan's prime minister. However, at the moment, the LDP still hasn't finalized this. They don't have a clear majority advantage, so the uncertainty is a bit higher. Still, it's likely that she will be elected. Her stance is mainly focused on fiscal expansion and right-wing politics. So today we saw that the Japanese stock market had a noticeable rise, but the yen remains under pressure. Actually, Takaichi's position on fiscal expansion has already become much more conservative compared to before the election. So overall, it looks like this. She will probably move toward a relatively standard, moderate fiscal policy. But it will still lean more toward expansion. Looking ahead, actually. Overall, the current global trend is that countries are shifting to the right, and now Takaichi's stance is probably also quite similar to Trump's. So we'll have to see how they cooperate in the future, and also pay attention to how the overall situation evolves. In addition, these past few days mark the 2-year anniversary since the start of the Israel-Hamas conflict in 2023. Recently, Israel and Hamas have been in negotiations, and on October 10th, the Nobel Peace Prize winner will be announced. It seems that both sides may be motivated to win the Nobel Peace Prize nomination, and because of the Israel-Hamas situation. They've been fighting for a while, but it's unclear if there will be any results. At present, it's actually very difficult for either side to make a breakthrough, because Hamas is unwilling to give up its arms or leave Palestine. As for Israel, their stance is currently quite tough. So, with both sides holding firm positions, the situation remains at a stalemate for now. We'll have to see how things develop going forward. Alright, next let's look at the latest developments from the US government. It seems that Trump is sending more National Guard troops into different cities, and the most recent move is deploying them to Chicago. The main purpose is to assist with immigration support and law enforcement. However, the governor has said that there's no need for this at the moment. Trump is sending National Guard troops into various cities across the US, and the mayors or governors of these cities are all potential Democratic presidential candidates in the future. They could also become major challengers to Trump. For example, previously he sent troops. The National Guard was sent to Los Angeles, and the governor of Los Angeles, well, actually, the governor of California is Gavin Newsom. He is widely seen as a potential Democratic challenger to Trump. Now, the governor of Illinois, JB, is also considered a possible Democratic challenger to Trump. So it looks like, even though Trump is doing this under the pretense of using the excuse of assisting with the search for immigrants and law enforcement to enter these areas, there are probably some political party agreements behind the scenes. Next, the ongoing US government shutdown is still happening, and this shutdown is actually a big deal. However, from a stock market investment perspective, its importance is relatively less significant. Today is October 6th, so our next observation date will be October 15th, to see whether the government is still shut down at that time. If by this Friday the government is still shut down, most federal employees actually won't be getting paid. And if it drags on until next Wednesday, which is October 15th, even active-duty military personnel won't receive their paychecks. Right now, both the Republican and Democratic parties are still holding pretty firm positions, so at the moment, it looks like a standoff. The US government shutdown drama is likely to continue, and it really depends on when they can resolve their disputes and get the government back up and running. Alright, moving on. Actually, the market and all sectors are still. The analysis and commentary are relatively positive, still maintaining an optimistic outlook. Morgan Stanley mentioned that inflation actually helps increase companies' pricing power, which is beneficial for corporate profits next year. So, for businesses, this is a good thing. In addition, he believes that companies will improve their operational efficiency and strengthen their profitability, allowing them to continue generating strong cash flow. Therefore, these high valuation stocks can remain sustainable. When we look at US stocks, we often feel that their valuations are very high. But it seems like there's hardly any chance for a correction, and prices just keep going up. Some industry leaders or stock companies have valuations that are even unreasonably high. Besides the fact that these companies themselves are performing well, another factor is that investors from all over the world are pouring their money into US stocks. We can see that starting from the second half of this year, the appeal of European stocks has weakened. Right now, aside from the Hong Kong stock market, the US stock market is still the biggest magnet for capital. That's also why US companies tend to have relatively higher valuations. Sometimes, if we only look at a company's valuation, we might miss out on some investment opportunities. In addition, some analysts believe that US companies could deliver earnings reports that exceed expectations, starting from October, when the earnings season begins and third quarter results are announced. They think that the long-term economic performance and the solid outlook for AI make current earnings appear too low. The data currently being released ahead of the earnings reports looks relatively low, and we'll see some related information in a moment. Now, looking at this chart, does a low estimate mean something bad? Actually, no. If the estimates are low, then it's easier to beat expectations, and when companies beat expectations, their stock prices go up. This is a common strategy during earnings season. Look for companies that are performing well. There's basically nothing wrong with that. Sometimes, companies might have relatively low estimates, then after they release their earnings report. If the numbers look good, the stock price can go up. So, having low estimates really isn't a bad thing. Currently, the government shutdown is expected to last about 1 to 2 weeks. A recent trend we've seen is the government shutdown itself actually has a relatively small impact on the market. However, recently, because of increased demand for single stock options, volatility has gone up and premiums have also risen. Since the volatility and demand for these individual stocks are relatively high, this phenomenon has spilled over into the indices, causing stock indices themselves to rise. Historically, indices have also shown a simultaneous upward movement when the demand for single stock options increases, which has led to US stock indices and the indices themselves are both rising at the same time, which is relatively unusual. We'll take a look at this in a moment. We'll look at the chart in a moment, where I'll explain more details. First, let's look at the US fourth quarter earnings season profit expectations. The current profit expectation is 7.2% year-over-year growth, which is down from the 10.8% in quarter 2. Although it's a decrease, it's not necessarily a bad thing. As we just mentioned, lower expectations can lead to better than expected performance. This data is compiled by Bloomberg, showing 7.2%. If you refer to Reuters, or if you look at LSEG's numbers, the expectation is 18.8%. That's relatively optimistic, and this 8.8% figure is actually from early September, so it's gone up to nearly 9%. So overall, when you look at US companies' fourth quarter earnings reports, the outlook is positive and optimistic. So at the moment, that's the situation. There really isn't much to worry about on the corporate side, so it's just a matter of watching how individual companies perform going forward. Alright, so looking at the current market situation, there's a phenomenon happening now where individual stocks, stock indices, and volatility are all moving in the same direction. As for how this is developing, the current topic is that if nothing major happens, this phenomenon doesn't really have much impact. But it also means that going forward, market volatility could increase. However, this volatility can go both ways. It could be up or down. It could go up or it could go down. So, this really depends on whether the structure of the stock index changes. If the structure of the stock index doesn't change, like we just looked at with the S&P 500, the broader S&P, and the Dow Jones. If the structures of the S&P 500, Nasdaq, and Dow Jones are all still trending upward, then at this point, you should look at the performance of individual stocks. If, overall, there has not been a clear structural shift in the stock indices, then there is really no need to worry too much about the overall market. After that, it all comes down to how individual stocks perform. Alright, next up, this news just came out. OpenAI and AMD have reached an agreement. OpenAI will deploy AMD's 6G network GPUs within a few years, and AMD will grant OpenAI up to 160 million warrants, which are stock options. These warrants will be vested to OpenAI in stages. This agreement is expected to bring AMD tens of billions of dollars in revenue. So, as we'll see, AMD's stock price surged more than 20% in pre-market trading, with the price surpassing the 200 mark. So right now, it's just that. Right now, it looks like this is a case of event-driven growth. So, just for your reference, a lot of the time, stock market fluctuations are driven by events. In fact, starting from last month, it's been very clear that OpenAI has been signing agreements with various companies. And whenever companies sign agreements with them, there's a noticeable surge. So, what's happening today? OpenAI has a big event. It's holding its first developer conference in over a year. This Dev Day in 2025 will take place in California, and for those in Taiwan, it will be at 1 a.m. local time. This event is probably one of the most important things affecting the market tonight. Because right now, there really aren't any major economic data releases. And as for the Fed, everyone expects that in October they'll keep things as they are. So even though there are a lot of Fed-related speeches, the overall direction isn't really changing. There's not much uncertainty. And since earnings season hasn't started yet, the big events right now are probably individual company events or some activities and so on. Alright, now let's take a look at AMD. Actually, before this announcement, its stock price wasn't performing all that well. Right now, it's also hovering around the 50-day moving average, but after today, I think it's likely to see a significant jump. Right now, you can also see that AMD is up a lot in pre-market trading, but whether it can actually maintain this momentum through the trading day and at the close is something to watch. This can help gauge the market sentiment, whether people will, at this point, choose to sell on the news or continue to hold their shares, following the company's future growth, or hold on to their shares to see if there are more opportunities ahead. Alright, next we're going to talk about rare earths. So, what about rare earths? Here's the current situation. Rare earths as a whole are a group of elements. There are 17 in total. They're widely used in magnets, optics, electronics, military applications, and new energy. Their main function is energy conversion, and they offer a lot of benefits. Let me give you an example. Some rare earths are used to make new, compact electronic products. For instance, your smartphones and today's consumer electronics have gotten much smaller compared to the past, and that's thanks to the functions of rare earths. In addition, they're also used in generators. Rare earths provide key materials for electric vehicles and drones. So, in fact, rare earths are a crucial component in both modern industry and our information-driven lives. In addition, rare earths can also influence high-performance radars, missile guidance systems, as well as motors and sensing devices. This gives them even more applications in defense and high-tech fields. This also means that rare earths extend from technology into defense and the military sector. So, in other words, at every level, even up to national security, they hold tremendous value. Rare earths are extremely difficult to replace. Previously, there have always been people researching whether magnets without rare earths are feasible, but at present, it seems that magnets without rare earths have very low feasibility. So, looking at it this way, if you want to make these high-performance technologies, and then for military applications, you still need rare earths. Now, as for rare earths, they can be further divided into 3 categories: light, medium, and heavy. This classification mainly comes from differences in their atomic structure and density. The light rare earths are mainly used in fields like metallurgy and agriculture. As for the medium ones, the medium and heavy rare earths are relatively more important. For example, as we just mentioned, they're used in electric vehicles and so on. Currently, they're also used in materials for wind turbines and so on. So, these medium and heavy rare earths are the lifeblood of high-tech products. At the same time, they can also be used in the semiconductor and aerospace industries. That's why medium and heavy rare earths have even higher strategic value, and even more important products. So, globally, who is mining and refining rare earths? Currently, China mines about 70% of the world's rare earths. The rest are mined by countries like Myanmar, Australia, and some by the United States, but China accounts for about 70% of global production. In addition, among the 20 minerals promoted by the IA, China is the main refining country for 19 out of those 20 minerals, with an average share of about 70%. If we look at this chart, we can see exactly in which areas China holds this position. There's only one mineral where China doesn't have the advantage. Which country is it? Alright, so next, China has a complete industrial chain when it comes to rare earths. It's no longer just exporting rare earth ore. It has already moved beyond that stage. Now, it can directly export finished products, meaning it can do the refining itself, just like we mentioned earlier. So, China is exporting these high-end magnet products. As for the United States, it's now starting to work hard to catch up. Actually, the US has realized this issue for some time now, but rebuilding the supply chain will take at least 5 to 10 years. So at present, the US is still only at the stage of re-establishing the rare earth supply chain, basically just starting out. A few months ago, there was some news that the US hopes to allocate at least $2 billion from the CHIPS Act for this purpose. They plan to use this money to fund critical minerals programs. It was proposed to set up a $1 billion fund to accelerate the development of these critical mineral materials. These actions show that the US has already realized that rare earths are extremely important resources. This is something that cannot be controlled by China. It must be brought back and handled domestically, although there may be environmental and other issues in the future. There are still environmental concerns about pollution. However, since national security and military interests outweigh everything else, it looks like this will continue. Alright, now let's take a look at China's position in the supply chain. You can see that out of the 19 types of rare earths, aside from nickel, which is dominated by Indonesia, all the other segments are basically dominated by China. China's overall market share is extremely high, and when it comes to the refining chain, you can see from this chart that it includes rare earths and other major minerals, as well as lithium. Looking at rare earths, China's share is close to 90%, and for others, China actually holds a very high market share as well. Alright, so because China has such a high market share, it can have some pricing power in this area. That's also why, recently, we've seen China start to take action toward various countries or in regions where there have been some disputes with China, it has started to implement certain export controls, and these export controls have led to price increases. So right now, this is the situation that many countries are eager to get out of. They want to establish rare earth supply chains that don't rely on China. This is to offset China's sanctions, or rather, China's control over the situation. Alright, so what's the situation with the US trying to catch up? At present, the US government is focusing on critical materials. And as for this company, last year it used $5 million in cash plus $210 million in shares. That is, it increased its stake in the Mountain Pass rare earth mine from less than half to over 90%. So right now, we can understand that this company is mainly focused on. It is now the main holder of the new Kvanefjeld mine in Greenland. As for critical metals, this year it also received a $50 million government subsidy through the Defense Production Act. The government stake comes from this subsidy. Now, the US government thinks that instead of just giving out subsidies for nothing, it wants some return. So this perfect subsidy might turn into an equity stake, possibly around 8%. So what does this mean? Another implication is that, previously, Trump really wanted to buy Greenland or at least gain control over it. But because of certain international laws and some other factors, historical ties, he couldn't succeed. So if the US government invests in critical metals, and critical metals directly holds the largest rare earth mine rights in Greenland, then this is also a way for the US to gain control over Greenland. Alright, so besides critical metals, the US government has recently invested in companies like Lithium Americas and MP Materials. You might be more familiar with MP Materials, but Lithium Americas was just announced recently. So what's going on with this? Basically, the US Department of Energy acquired a 5% stake in Lithium Americas, as well as a 5% stake in the largest lithium mine in the US, Thacker Pass. So, they got 5% in both at the same time. And this This partnership or investment doesn't come with any price floor or guaranteed returns. It's not like the Department of Defense's agreement with MP Materials, where there's a set minimum purchase price. Also, when the Department of Energy invests in this company and it's mine, they're doing so through warrants priced at 1 cent. That means if you're an existing shareholder, you'll face dilution risk. So right now, the situation is actually, when the government acquires stakes in these companies, sometimes it genuinely helps the company, and other times it might just be a financial maneuver. But more or less, there's always the government's influence in the background. So right now, this company, Livent in America, is in a different situation. Previously, it actually had some loan agreements with the Department of Energy. Now, at the same time as this acquisition event, it will also borrow $2.23 billion from the Department of Energy to build a lithium carbonate processing plant. Once this plant is fully operational, it is expected to produce 40,000 metric tons of battery-grade lithium carbonate annually. As for this company, overall, the situation for the company still isn't that great, because previously it also had loans from the Department of Energy. But those earlier loans actually required restructuring. The reason for the restructuring was that the company couldn't really pay back the money, so it wanted to restructure. This is also because its current operational efficiency isn't that good. As for this company, in addition to the warrants and loans it has with the Department of Energy, it has also managed to extend the repayment deadline for one of its loans from the Department of Energy by 5 years. This means that during these 5 years, the company doesn't have to make any repayments to the DOE. Only after these 5 years will it need to start repaying its loan. So right now, what we're seeing is that if the government takes an equity stake in the company, the possible effect is that resource reserves and low efficiency are also issues, and it's clear that official interests are overriding commercial considerations. In other words, for this Latin American company, if it were just up to the company itself, it probably wouldn't have the means or the need to spend so much money to build a lithium carbonate processing plant. But because of pressure from the US government and its foreign policy requirements, the company was forced to take out a large loan from the Department of Energy to build this plant. So what happens after production starts? There's an expected output, but there's still a long way to go from building the plant to actually starting production, and there's a lot of uncertainty in between. Will the government continue to put in more money? That's not certain either. So as of now, overall, it seems that when the government intervenes in an industry, these kinds of situations occur. But as for this industry, we can think about why that is. The reason it can't develop today is because the cost effectiveness is low. Maybe a lot of money has been invested, but there hasn't been much return, so it's better not to do it at all. Plus, there are environmental and legal regulations that prevent it from happening. So actually, if you think about it, without government support, it really couldn't develop at all. It's only when the government recognizes its importance, or its value beyond just economic factors, that the essential needs are met, and that's what truly allows it to develop. Someone asked about the price trend of rare earths, actually. Looking at it now, rare earths actually have many components, but when we look at the details, the main focus is still on MP Materials. Right now, big companies are still developing in this way, so at present, this overall situation is likely to continue for a while, and because of this, the trend is long-term, so throughout this long-term process, there will be some pullbacks and periods of consolidation. In this context, there's really no need to worry too much. It really depends on whether your investment approach is more about timing the market, or if your time frame is relatively short, you can make more frequent trades, but if you're in it for the long haul, you might just want to follow the trend and keep developing with it. Alright, so looking at it now, MP is still a leading company here in the US. We can see that overall, in terms of the system, it covers things like mining, then smelting, refining, and so on, followed by recycling, and finally full integration. Currently, the main company is MP Materials. In addition, there's also Ucore, UK, which is also a publicly listed company. Other companies include ReElement Technologies, Broken Elements, Urban Mining, and so on. These companies are all not publicly listed. So at present, actually, as long as the rare earth sector in the US is still in this growth phase, there will be a lot of momentum. This momentum will first drive up company stock prices. But in the long run, it really depends on the company's fundamentals. For now, MP remains the most stable overall, and it is also currently the only company in the US that has. It's the only company with a complete capability from mining to refining. Now, let's take a look at the stock price trends. You can see that in the critical materials and critical metals sectors, there have already been some significant gains in the past few days last week. So, for now, these stocks are likely to keep rising, driven by ongoing news. You can see this reflected in the performance of these companies. The changes in stock prices are all being driven by market sentiment, not necessarily by substantial developments. Right now, the way rare earth stocks are moving is a bit like what we saw with nuclear energy. It's mainly driven by hype around the theme. Compared to nuclear energy, though, there are fewer companies involved in rare earths, and government support is even more pronounced here. So in this area, there's even more potential for future development. One thing is, its path forward is actually clearer, because we can see that it might just be in energy. This development approach means that, aside from Hunan, there are also wind energy, solar energy, natural gas, and so on. If it's just rare earths, then it's only rare earths. There's nothing else that can replace them. So, the development of rare earths, or rather, the direction of this floating stone, is much clearer. Now, these are critical metals. Next, let's talk about critical metals. They just had a partner called, you call it Realm Metals. That company is, a few weeks ago, it was mentioned that they signed a 10-year agreement with Critical Metals. That's Critical Metals. Once extracted, the rare earths will be sent to Ukraine Metal for processing. So at the moment, metal stock price has also seen a noticeable increase. Going forward, Euromotor is still something everyone should keep an eye on. Because right now, actually it is. It has already received support, and it also has some long-term agreements with Critical Metals. These long-term agreements basically represent confidence and a stable source of revenue in the future. Alright, another one is the Leading America we just mentioned. Its stock price has performed quite well recently, so going forward, we can see whether this government support will bring even more positive developments. Alright, next up is MP Materials. Currently, this company's performance is relatively stable, and going forward, it should continue to rise along with the overall industry trend. Also, we can see that besides Critical Metals, there are actually, when everyone is discussing this, another company that might be acquired by the US government is USA Rare Earth, so its stock price has also seen significant changes recently. This is a company worth keeping an eye on to see if there are any opportunities in the future. There's also another related company, which is both the uranium and rare earth company. So it actually spans both the nuclear energy and rare earth sectors, two different themes, and it really does have. The company carrying out this business activity is Energy Fuels. So everyone can pay attention to that. In addition, there's another company that's been performing quite well recently, and that company is, Lynas. It's an Australian company, and currently, it's the only heavy rare earth refinery outside of China. As we just mentioned, heavy rare earths have relatively higher economic value and are even more important for technology, semiconductors, and national security. Currently, it is operating in this area. It has a presence in the United States, and the US government is supporting it. Its main production base is currently in Malaysia, so this company is listed in Australia, and you can look into it for reference. Alright, so that's it for today's lesson. Now, let's take a look at the current pre-market performance. As you can see, at the moment, in the market right now, overall, it's still showing relatively strong activity. Basically, stocks with news are seeing bigger gains. For example, MV has already risen more than 30% to around 219, which is quite a significant jump. Additionally, the critical metals we mentioned are also among the top performers. Aside from MV, the major tech company Nvidia is experiencing a slight decline. As for Intel, it's seen a slight uptick. You can see that stocks which surged a lot last week, like quantum stocks, have recently started to pull back a bit, such as quantum computing and others. So, at the moment, the movement of funds is relatively fast, and now it's more about individual stock opportunities. Let's take a look at the stocks that have seen the biggest gains. Currently, aside from MT, there's also EOC, which we've mentioned before. At the moment, it's also continuing to rise. Okay, so LB is also seeing a significant increase right now. Xilanhua company also seems to be dropping due to specific company-related factors. At present, there aren't any major tech companies among the decliners here, so overall things should still be okay. That's all for today's equity update. Good night, and thank you all for watching.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.